Welcome to another episode of Purchase to Profit. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today is an attorney, author, entrepreneur, and speaker. He's been involved in thousands of real estate transactions and has authored 6 books about real estate and investing. Bill Bronchick is the host of LegalWiz.com. Bill, welcome to Purchase to Profits. It's great to have you on the show.
Thank you. It's my pleasure to be here.
Pleasure is all mine. So to kick things off, tell us about your real estate goals right now.
My real estate goals is to create as much cash flow as what I have existing, which is a lot of single family and small multifamily and a little bit of commercial, a little bit of apartment building stuff, by keeping costs down and keeping rents up, the usual, which is sometimes a fight with my property manager who wants to fix everything and and not deal with tenant headaches. And they're like, hey, it's a profit business, and it's also to pick up more. I want to pick up more single family, small multifamily, and just hold for the long term because I think interest rates are going to rise, obviously, and whatever you could fix at today's interest rates in the future as rents go up, particularly on the middle to lower income scale of things, which they're not building any more of. I think those will ultimately be the best retirement properties.
Yeah, and you make a good point with interest rates. Right now, it's basically free money, right?
As much, and it's gone up a couple of points, but it's still almost free money.
Yeah. Well, especially, when it's always interesting to speak with investors who've been in the game for, let's say, 30 years, and they'll tell you the stories about what it used to be like.
Yeah, 24% interest. I remember when my mom negotiated an owner finance deal from an architect who built this really unique house on the water in Long Island, and it was $77,000, and it was 14% interest for a personal residence, and that was a good deal.
Yeah,
that was actually a good deal at the time.
Yeah, no, it's interesting to see how the lending cycle changes and all that stuff. And you mentioned you're in single family and smaller multifamily deals. Was that did you get into the single families first and then get into the smaller multifamily? Like, what was your how did you get into real estate in the first place?
I started like most people did. I started flipping houses, wholesaling houses, doing lease options, and then I picked up a couple of multifamilies along the way, and then I started venturing out into commercial stuff, self-storage, mobile home park, bigger apartment buildings as well, and doing syndications, and just kind of built it up as we went.
Yeah. And so are you still actively doing the larger commercial deals, or are you concentrating right now on those single family?
I'm concentrating mostly on the single family, just stuff that I can get good terms on, owner financing, subject to something like that, and then just rent it out.
Yeah. And I'm always curious because, doing the single family and then doing the larger syndications, that's 2 totally different skill sets.
Oh yeah.
So how did you find going back and forth wearing the different hats?
Well, it's, especially if you're going to do a syndication where you've got multiple partners, that becomes much more complex, much more moving parts and legal issues to deal with. It's also much more math intensive because everything is, commercial is all math. With single family houses, it's just comps and rents. It's pretty simple.
Yeah.
Commercials, and there's much more due diligence too on commercial, and the deal could take 6 months to a year.
Oh, I absolutely. So for yourself, was it? Are you concentrating more on the single families now, just because that multifamily space is a little bit overheated? Was that part of it?
No, not so much. Just because I've got a pretty good setup right now with a property manager and what he manages and how he does it, and he's trained well, and it's pretty smooth operation. So it's just the economy of scale, just stretching it out a little bit and getting more properties in the same realm.
Yeah, and you mentioned, your property manager. Lots of the listeners on this show, they have a handful of properties and they're looking to scale bigger. What sort of advice would you give them in choosing a property manager and working with them?
That's a good question. First of all, look at their experience in your type of property. Just because they manage properties doesn't mean they manage your type of property. So if you're dealing on working class, lower middle class properties, and they're used to dealing with better properties, that may not be the right thing. Or a different neighborhood. They don't know the dynamics of the neighborhood. They don't know all the code enforcement people and what they expect out of keeping your property up and so forth. The judges at the local landlord tenant court and
Yeah.
the above. So they should have familiarity. They should also understand that this is a profit business. So just because a tenant wants something doesn't mean they get it. Of course, when the rental market was terrible 15 years ago, they did get it. But now that the rental market is pro-landlord, you don't have to be quite so accommodating. We want to keep it safe. We want to keep it clean. We want to do what we promise in the lease. But for example, if in the wintertime they rented it and there was no screens on the windows, and then in the summer they go, oh, gee, it's hot, I want screens. Yeah, great. It's not in the lease. It wasn't there when you moved in. You're going to have to pay extra for that.
Yeah.
We give them exactly what they've bargained for, no more, no less.
Yeah. And for yourself, how have you mentioned walking the fine line between keeping the tenants happy and then making sure you're profitable. Over all the years you've been at it, what do you wish you did some things differently? Maybe there's an example of where you should have maybe held your ground a little bit more.
Well, generally, I wish I'd kept more.
Yeah.
But in terms of dealing with tenants and stuff, I think in the beginning I was a little shy about being a little tougher landlord because afraid they would leave. But in this market now, rents are rising faster than you can raise it on your existing tenants. So if they want to leave, that's just okay with me because I'll lose a month and some paint and carpet, and then I'll end up getting 20% more rent.
Yeah, no, for sure.
Next year. Yeah. That's the biggest problem I find right now is you can't raise rents fast enough to keep up with the market. If the market goes up $100 a year and the tenant is not willing to pay an extra $100 a year, only $50, you want to reward long-term tenants, but you don't want to keep your rent so low that you're losing money just to keep a long-term tenant.
For sure. And I always tell people it's the tenants that know the rental comps better than anybody else.
Oh, sure.
So if you're just bringing up your rents to market value, they know what else is out there.
Right. They know moving is going to be difficult, expensive, and cost them just as much if they had to move and pay market rent anyway. So
yeah.
We try to be fair. I mean, if market rent is $100 more that year, we maybe raise it 50 or 60, to reward them for being good long-term tenants. Yeah. But at some point, it has to become, a financial decision more than just a relationship decision.
Yeah, for sure. And as your portfolio grew, what changes did you have to make in terms of how you thought about it and how you managed it as you started acquiring more and more units?
Well, in the beginning, I managed all my properties, like most people do. So once we got to about 15 properties, single families, then it was about time. There was just too much. We hired an employee to do that, and then eventually got a property management company. But as soon as you have a fourplex, forget it. I mean, one fourplex will drive you crazy more than 20 houses.
Yeah,
lower end neighborhood.
Yeah, and you've got a whole bunch of other stuff going on as well besides your real estate. So, have you developed any routines or rituals that help keep you focused?
Oh, yeah. One of the things, a lot of people use calendars and to-do lists in like Google, for example. They have a calendar, Google Calendar, and a Google to-do list. Problem with to-do lists is when you don't do them, nothing happens. It just rolls over.
Yeah.
What I do is I use my Google Calendar like an appointment for myself. So if I know I need to get these 3 things done today, I'll calendar them in as appointments with myself, like I have different colors. One's for to-dos, one's for meetings, one's for calls, one's for, and so forth. So I have like 6 different colors in there. And my calendar is completely filled up for the week because I know if I have to make 3 calls, it's going to take a half an hour. Then I book out a half an hour and I put it in orange, meaning I'm going to make calls during that half hour.
Yeah. I like that. I like the different color codes for blocking in time. I think that's really good.
Yeah. And it works out pretty well. So, I have my personal calendar, which the rest of my staff doesn't see. And then I have basically you can have an unlimited number of calendars within Google Calendar, and each one has a different color.
Yeah. No, I like that. Actually, I was just reading something before we came on about the different features of Google Calendar that you might not know, and that was one of them. So that's a good tip. So out of all the real estate deals that you've done so far, is there one that stands out as a keystone deal that made a big impact on you?
Oh yeah, I have one I did in my self-directed IRA, which was a killer. I bought 7 houses from a seller who was a retiring landlord. He had bought them all in the early 80s for 20, 25 grand a pop. They were worth, this was about 5 years ago, they were worth about $1.30 at the time, and he sold the whole package for me for basically $1.10 each. 5% down, 6% interest, fully amortized. And, over the last 5 years, rents have doubled and the values have doubled. So
that's awesome.
Yeah. And it's all in my Roth IRA tax-free. So I can't complain.
Yeah. And I'm glad you brought up the self-directed IRA, because I think that's such an untapped source of potential for people. So can you maybe, if somebody's listening and they don't know what we're talking about, can you just briefly explain what investing through your self-directed IRA is all about?
Sure. So when you have an IRA with like Fidelity or Schwab or Edward Jones, the big boys, they're going to tell you have a self-directed IRA because you can direct investments into different things like stocks, mutual funds, ETFs, money market, but it's bonds, but it's all the same stuff. Basically. The IRS says you can invest your IRA or 401k into anything but collectibles or life insurance. So that means everything else is fair game, but they don't tell you that because they're not real estate brokers. They don't make money off of real estate, or you buy tax liens, they don't get a commission on that. So they're only going to sell you things that they get a commission on. You can self-direct your IRA by moving it to a more boutique firm that'll say you can invest it in anything the law allows, which is everything but collectibles and insurance, but the fees are higher. So instead of paying $30 a year, it's more like $200 or $300 a year. And instead of $7 click to trade, you got to fill out a form and pay $30. But it's so much well worth it, because when you can earn returns of 20, 30, 40% or more in your IRA in real estate, you'll find those fees are just more than reasonable.
Yeah, $300 is nothing. Nothing. Yeah. So is that so for yourself then? Are you making a pretty concerted effort to beef up your self-directed IRA? Like, you're doing the 2-pronged approach?
Yes, I have separate. I have my IRA stuff and then my non-IRA stuff. I try to build the long-term growth stuff, usually the rentals, in the IRA as much as I can, and then the flips I'll do outside of the IRA because that's more cash that you can use to pay, like for my kids' college tuition, stuff like that.
Yeah, for sure. So if somebody's out there, maybe they're just starting from scratch, they haven't done any investing through their self-directed IRA. You mentioned that you try and keep most of your rentals and go through there. Is that where you would suggest people start, or would you say do a couple deals first and then start looking at your IRA?
Well, in IRA, you can only contribute $6,000 a year unless you're over 57,000 a year. So there's not a lot you can put in it. If you have an old IRA or 401k from an old employer, you could roll that. into a
Yeah.
self-directed IRA. So if you got 50 grand sitting around, you could put that in there. Now, you don't have to buy properties all cash, so you don't need 400 grand in your IRA to do a deal. As I explained, the 7 houses I bought with 38,000 down. So, controlling $1 million portfolio with 38,000 is incredible leverage. And you can even borrow money from banks. There are banks that will lend that you can buy, put a down payment on a property, and then borrow the rest from a local commercial bank. You can't do it with a regular, Fannie Freddie type of loan, Wells Fargo loan. But there are lenders that specialize in those types of loans. So you don't need to, 300 grand in an IRA to buy a property.
Yeah.
So,
For sure. And there's lots of teachers out there, policemen, firefighters.
Sure.
Like they've got that nest egg in there, and it's just
Sure.
ready to get rolled over.
Exactly. And you can do really well. I have a lot of my clients that I've set up. I've probably set up 300 or 400 of those self-directed IRAs for clients. And, they all tell me, they said in the last 5 or 6 years, their properties have doubled and their rents have doubled. And, they've made returns of 20, 30, 40%. I can't tell, there's rules about securities. I can't say investment has risk. I'm not telling you to buy any particular investment. I have to give that disclaimer, but it just says, by way of an example, the deal I did with the 7 houses has multiplied tenfold, on my investment over the last 5 years.
Yeah. And for your own portfolio, are you trying to go direct to seller most of the time?
Yeah. Once in a while, I'll have a realtor bring me a deal, or a wholesaler that has it under contract with a property listed by a realtor. But most of the time, I try to deal directly with a seller. Yes.
Yeah. And so what sort of strategies or marketing tactics are you using right now to get in front of those sellers? Because lots of people maybe they have 1 or 2 properties and
Right.
they're just trying to scale a little bit more.
Sure. Well, to be honest, having run a real estate club for 18 years and speaking all over the country, people bring me deals.
Yeah.
Kind of my business is people bring me deals. That's one of the benefits of doing seminars and stuff like that. But if I were going to start out, if I didn't have all that networking out there, I would first get to know all the realtors, all the investors, and let them know who you are, so they bring you deals. Because networking, I think, is the number one way to find deals. And then, you could flush out people by doing mailers, out-of-state owners, people who recently inherited properties. Those are all lists you can buy. People, if you're going to look to do owner financing, people with free and clear properties. And then just if you're looking for rental properties, everyone looks in the wrong place on Craigslist. They look on for sale by owner and try to talk to a nut who's trying to sell his house without a realtor. Don't call those people. Call the landlords who have houses for rent and say, hey, I'm just like you. Any interest in retiring and selling some of your properties?
Yeah.
And that's where I found that 7 house deal. It was a retiring landlord.
Yeah. No, and you make such a good point about going after the landlords, because you never know what sort of position they're in. They might be ready to, retire to their yacht in the Caribbean Ocean.
Right. Or maybe had some, just sick of managing, sick of dealing with it, too old to deal with it. And more than likely, they're going to have more than one.
Yeah. And, what my personal belief is that mom and pop operation is the greatest opportunity we have right now, because there are so many of them out there.
Yeah, definitely. And even small multifamily, units, duplex, threeplex, fourplex. You're going to find a lot of people who own them in their own names. And you can buy lists of people who own those, and you could filter by non-corporate owners. So that's the easiest way to get it. John and Jane Doe or John and Jane Doe Living Trust own a fourplex, and you can mail to those people and see what comes up.
Yeah, no, for sure. So looking back, what would you say was your biggest challenge in your real estate investing career?
My biggest challenge was delegating without responsibility for that. First I said, I got to do it all myself. I just didn't want anyone else to touch it. And then I hired a part-time employee, and I went, oh, this is easy. You can delegate. And then I hired multiple employees, and I delegated lots. But the problem was, at some point, I had to hire someone to interview my employees to figure out what they did, because I didn't even know what they were doing. and much less doing what I originally told them to do. So it's easy to delegate, but you have to have the ability to have a check and balance, so you know what you've given out to either an employer or a contractor or a property manager is doing it the way that you want it to be done, the way you originally explained it to them.
Yeah, well, that's such a good point, because I think as entrepreneurs, we start off doing everything ourselves because it's our baby, and it's hard to let go of control. And then we're not
Right.
really wired to put in those systems like you were talking about.
Right.
Yeah.
You got to have a system where, at least once a year I sit down with my group and I have them all write up basically like a 3 or 4 page synopsis of what their job description is, what they do on a regular basis. So if God forbid, I lose one or they get sick, I can just pick up that piece of paper and hire someone and say, here's your job description.
Yeah. And once you brought those people on, what impact did that have on your business? Was there a big growth spurt at that point?
Huge, because it focuses my time on the 20% that produces the 80% of results rather than vice versa.
Yeah.
The most money you'll make as a real estate investor is not working on your website or balancing your books, or doing mailers or painting. It's going to be negotiating deals.
Yeah.
Getting on the phone or getting in front of sellers.
Yeah. And it's like, there's people who go out and paint their own properties, but you have to figure out, how much your time's worth per hour. And that's how, you're way better off doing other things than, rolling a wall.
Right, absolutely. I have people who say, I don't have a lot of skills, but I could trash out a house. Trash out a house? That's like a $9 an hour job.
Yeah.
Why would you be doing that?
Yeah, 100%. Well, it all goes back to what's Michael Gerber's E-Myth book. That's a good one. Yeah.
Yes, you got to work on your business, not in your business.
Yeah, 100%. So how has getting into real estate and doing all that changed your life?
Well, it's allowed me to have, I do multiple things. I have my real estate holdings and the income from that. I have income from my books and speaking, and I have income from being a lawyer. So it's good to have multiple streams of income and multiple things that I could be doing in any given month or any given week. It has allowed me to send my kids to school, and not have them have student loans. It has allowed me to, live a nice lifestyle where we don't have to worry about money. I mean, I still work because I'm an entrepreneur and I can't relax. Yeah. I'll never really retire, but in theory I'll retire. But as long as my brain's working, I'm gonna be scheming or coming up with some kind of idea to make money or do something productive.
Yeah,
but it's nice to know that my retirement is taken care of and I don't have to really worry about it.
No, 100%. And let's say 5 to 10 years from now, where do you think your real estate portfolio will be?
Double again.
Nice. I like it.
Or at least 50% more, I think.
Yeah. No, that's awesome.
Yeah, what's great about real estate is, if you've ever, people watching, if you've ever gone to Fidelity or Schwab and you click on their little calculator of how to retire and you put I'm going to save X amount a year and I assume a 5% return, and then you have to click the button that says adjust for inflation, and you realize, I got to double everything because, $1 million now is not worth $1 million in 15 years, where real estate automatically adjusts. So if you've got $10,000 a month now in cash flow, you'll have 20,000 in 10 years. It'll adjust for inflation.
Yeah, no, that's such a good point. And, most people can't live long enough to retire using those little calculators. You have to live until you're 400.
Yeah, right. Either that or you got to contribute 90% of your salary.
That's right. And you mentioned your books. So can you just let us know what sort of books you have out and where people can find those?
I have 6 paperbacks that I've written through publishers that are available on major booksellers like Amazon, and also on my website. I have those, as well as ebooks and e-courses that are much more detailed and advanced. And that website is legalwiz.com, legalwiz.com. If you click on lots of free articles, free videos, free information, downloads, but if you click on store and use the code SETH, SCTH, you can get 30% off anything on the website.
That's awesome. Well, thanks for doing that for the listeners. I really appreciate it.
My pleasure.
Yeah. Well, Bill, just want to say thanks so much for taking the time today and sharing your success with us.
It's been my pleasure, Seth. Thanks for inviting me.
Pleasure was all mine. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.